we going to see prices go above 80 in 2019?
I don't comment on prices, and I stopped chasing the price, and we took a policy in OPEC not to chase the price. We will never achieve anything by trying to achieve a price. It's not logical, and it's not practical. I think what we learned is the fact that if you make the market at balance, you will get a price that is good for consumer and a price that is good for the investors or the producers. And that price, whatever it is going to be the price that we have to accept. We don't want a higher price that threaten the world economic growth, because we will lose our consumers. Whenever our consumers talk, we listen. We meet with them. And it's all clear. I think it's clear to the world what we have done after the meeting in June, when there was a concern and that the supply is not going to be enough. We pushed ourselves. We produced more to cater for the balance in the market.
But certainly these economies in the region, particularly Saudi Arabia, need those higher prices to support all of the economic changes that they're undergoing at the moment.
I think you go back to what would keep investments. And what would keep investment is a price that keep those governments running. And if you are not at that price, then they are not going to develop oil. Then the risk of higher oil prices is going to be there. What we are trying to do is investing even when it was a hard time. Abu Dhabi invested when it was tough to invest, when the prices were so low in the 30s and in the 40s. We kept those projects and we kept the promise and we were challenged by the shareholders. Some of them are here in the room and some of those investments. But we pushed because we believe on the market balance. I think those countries will continue investing, and I'm talking about UAE, Saudi Arabia, to balance the market. They are not investing to only look at the economic benefits of it. The other countries and producers in the world are not exactly doing that when the price is not correct for them. So we all seen that when OPEC was inactive back in 2000, and we decided it's not our mistake. There was so much oil in the market. We're not going to do anything in 2015 and 16, and I was there. The reason we did that, it was too much to take from the market at that time, that we will destroy our market share. And the market share then was very relevant, because if you take 4 million, 5 million of your production, you're not going to get that back. So when OPEC was not there, people are saying, what if OPEC is not there? And I tell them, go and look at 2015, 2016. OPEC was not there. We decided to do nothing. And at that time, the shale production went down by almost 1 million barrels. The world economy slowed down. So lower oil prices, but guess what? No one is benefiting from that. Unemployment, companies bankrupted, and the oil industry in the United States suffered during those 2 years.
You're saying it worked, no change of strategy going forward.
Sorry?
You're saying it worked, no change of strategy when it comes to market share going forward.
I think what I'm saying is we are not going to do that, because we are at a much better situation today. At that time, you were talking about significant quantities stored above the 5 years average. There were ships going in the sea. They don't know. We felt everything. So at that time, it did not make sense for us to intervene. And I think the shale oil producers have learned the lesson of not overdoing it. And now we are seeing that adjustment. It happened and it happened rather more quickly. So in between, if you look at from October to December, you see a higher rig counts, and then you see slowdown when the prices, and then you see a decline.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.